Hey everyone. Ever since the launch of ChatGPT, the artificial intelligence investing wave has been ever increasing. Now, it's been mostly positive, and there's been very few companies that I've felt have been devastated by the rise of artificial intelligence. There is one, however, that I did highlight at the beginning of this year, and that's the company I'm going to talk about here, and that is Chegg, the education technology company. So I'm going to go through all of the reasons why this business has been devastated by the rise of AI and why I think investors should still avoid this stock. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so to start the year, I made this video here cautioning investors. I said caution. I even used emojis here, and I said avoid this growth stock in 2024. You can see I made this video 5 months ago, more than 5 months ago. Here I made it exactly December 31st, 2023, and I told investors to avoid this growth stock. And the growth stock in this video I talked about was Chegg, and I said how Chegg is the top stock I would avoid in 2024. I said if you're going to avoid any stock this year, make it this one. Do not touch this stock. And so far, that has worked out well for those that followed that advice. Chegg's stock price is down 67.56% year to date, while the S&P 500 index is up 12.81%. So you will have avoided huge losses if you avoided Chegg stock. Now, the primary reason for this underperformance is ChatGPT and other large language models that completely devastated Chegg's business model. Chegg is an education technology company that helps students with their college studies primarily. Students would go to Chegg for questions like, how do I calculate the net profit margin? Or how do I calculate the gross profit margin? Right? And these were questions that Chegg was great at helping students solve because they have subject matter experts that would answer that question in a step-by-step process. So students not only get the answer, but they get the process for how to get the answer. But now you have ChatGPT. And I've tested ChatGPT for these types of questions, and ChatGPT is great for these types of questions. These types of questions that students formerly used to have to go to Chegg and pay a monthly fee anywhere from $14.99 to $19.99 per month, you can now get it at ChatGPT, and it's much more convenient. It's much faster. You get your answers right away. You see, with Chegg, students had limits. You subscribed to the membership and you got, let's say, 20 questions per month was your limit to ask and then get those questions answered. And if you reached that limit of 20 questions, you had to wait until next month to get your reset. However, sometimes the questions that you're asking, they were already on the platform. Somebody else had asked it maybe a year ago or 2 years ago or 3 years ago, and that question and answer was available for you to learn from. And that's why I loved Chegg stock at one point. At one point, Chegg was one of my favorite stocks, actually, because it had 80 million pieces of proprietary content like that, question and answers, that helped students with their studies. So they didn't need to pay again when a student asked this question because they already had it solved. So they pay for that question and answer once, and then that piece of content remained on the platform essentially forever for students to learn from. And that was a great competitive advantage against everyone else. However, ChatGPT totally disrupted that. It made those 80 million pieces, it's now reached over 100 million pieces of proprietary content nearly worthless, because you can get that same information on ChatGPT faster, more effective, in a better format because it's easy. It's easier to learn from when you ask and it's just right there, whereas for Chegg you have to go searching for that question and answer. So it was really bad news for Chegg. The advent of ChatGPT has been really bad news for Chegg, and the stock price reflects that really bad news. Now, the exodus is only getting started. So in its latest quarter, they experienced a decrease of 7% of revenue year over year, and they experienced a decrease of 8% year over year in terms of their subscriptions. They still have 4.7 million subscriptions. I suspect this will get much worse, and I feel like the company is not highlighting just how big of a problem this is. I think they're trying to paint a rosy picture here. The new CEO, like the previous CEO, just resigned, right? Saying, oh, I think this is a great time for a new CEO to take over. Was it? Or was it just you observing that the situation is not good here and you're just saying, all right, it's good for me to get out now before things really get bad here at the company? So the new CEO comes in and says, as we are seeing encouraging signs of our new AI-enabled platform will serve more students in more ways, it's the right time for a new CEO to step in. And the new CEO said that we had a very productive first quarter and successfully rolled out the first of many AI-enabled experiences that will strengthen their product market fit in 2024 and beyond. So they're trying to respond with their own AI service to counter that of ChatGPT. But the major issue here is that ChatGPT is free. It has a free version. There's many other free large language models. So is Chegg going to offer this for free? That disrupts the entire business model. Revenue would go to close to zero unless you're going to have some kind of add-on service or some ad-supported service, in which case, why would somebody use Chegg and experience a bunch of advertising when they could go to ChatGPT or other large language models and experience and get that learning for free without ads? So they are forecasting a decrease in revenue, right? It's going to go from 174 million down to 159 million in the next quarter. And I think this downtrend will just continue. I don't think their revenue is going to go to zero. I don't think that's going to be the case. I think they will retain some members. I think there are some use cases where students feel like Chegg can be useful. There's some narrow use cases where they can't go to ChatGPT for the answers or for the support. And so Chegg will have some value, but it's not going to be anywhere near the level of revenue and the millions of subscribers they have. I wouldn't be surprised if this goes down. Their revenue and subscribers go down by another 50% from here. I wouldn't be surprised if that happens. I'm not saying that's what's going to happen, but I wouldn't be surprised if that is what happens. A lot of it is going to depend on how these large language models evolve. Is ChatGPT going to remain free? Is it going to have a free version that's as robust as it is now? Are other language models going to remain free? It's intensive. It costs a lot of computing power to generate these answers. So I don't know if longer term they will remain free. And if they don't remain free and they have to charge customers, then at that point Chegg will have an advantage, because Chegg is more specific for education purposes. And so its cost to serve can be lower. And so it can carve out a niche there. But again, it would be at a much smaller place than where it is now in terms of revenue, subscribers, etc. So I haven't liked what I've seen from Chegg's management over the last few quarters. They've continued to try to paint a rosy picture, to try and say that they understand that ChatGPT is disrupting the business and that they're countering with some strategies to offset some of those. I haven't been pleased, and if I was an investor, I don't own the stock. If I was an investor in Chegg, I wouldn't be happy with the moves. If I was an investor in Chegg, what I would want from Chegg would be just a red alert going off at the company and panic mode and just intense focus on shrinking, cutting costs. Where can we save expense? Where can we reduce labor? Where can we cut office space? What can we do to prepare for what's going to be, or what is very likely to be, a much smaller subscriber base and a much smaller revenue base? That's what I would like to see from management, But I haven't been seeing that over the last several quarters as ChatGPT has become more and more popular. So I will reiterate that I think Chegg, even though it's already down 67%, and it might be tempting to look at this forward PE ratio of just 3.4 and say, oh my goodness, this is a cheap stock that still has reasonable profit margins or reasonable cash flow from operations, even though the operating profit margin has turned negative already, negative 9.36 at the trailing 12 month. You might look at its history and say, oh, it's going to get back to this trend, right? It was an excellent business. I was talking about for a while how I really liked Chegg's business until ChatGPT came out. And then I totally reversed on it. It's been the fastest reversal out of any company that I've followed to go from being so highly recommended to becoming the worst on my list of stocks because of how disruptive ChatGPT has been. So yeah, I wouldn't go anywhere near this stock if I was an investor looking for a stock. This is not a value stock in my opinion. I think this is a trap and I would avoid it. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.